Hi, I'm Tom Lydon, editor of ETF Trends, here in Hollywood, Florida at the Inside ETF conference. I'm here with Chris Davis, chairman and portfolio manager of Davis Advisors. Great to see you, Chris.
Tom, it's good to be here.
I'm honored because for many, many years I followed your great performance and everything that your family has done for the fund industry, and now you've entered the ETF business. We're really excited. What was the thought process there?
Well, we felt in the world of ETFs, traditional ETFs, there was something missing. Because ETFs have these advantages of transparency and low costs and tax efficiency, but we also feel that there are huge advantages to proven long-term active management. You know, the judgment, the alignment, the experience, the accountability, the long-term opportunity to outperform. And our feeling was we're in a good position as a firm to put the benefits of proven long-term active management together with the benefits of a traditional ETF.
Now, it's no secret, active management has kind of been poo-pooed lately, and we were talking yesterday and you agree.
Well, I think I would never want to make a case for the average active manager, right? When you look at the average active manager, what do they have? They have high costs. They have high turnover. They have portfolio managers that have very little experience. They don't have a lot of alignment. They often don't have money invested in their own funds, so there's not that stewardship culture. There's a high turnover mentality. So it's hard to make a case for why that should outperform. We certainly wouldn't. But what we know is that we have a record as sort of proven long-term asset managers, active managers, as really looking different from the benchmark. So being true active managers versus that sort of benchmark hugging, but also of doing our own research, of identifying and building concentrated portfolios that have been able to outperform over the long term.
Absolutely, and your costs relatively to the market are also low, including your great performance. So let me ask you this. Did your clients ask you to consider this at all, or was that part of the process?
Well, that was something that was particularly powerful. What we had was, we had a lot of financial advisors and clients that had been with us for a long term that have looked at the ETF world and said to us, why can't you do that? There are these advantages of the tax efficiency and so on, the transparency, low cost. Sometimes they've moved to firms that have ETF platforms, and they said, we want a place in our portfolio for your active management, but in this structure. But not only our existing clients that had this interest, but we even think in the world of traditional ETF investors who have always been identified as passive, we think that there's going to come a time when they will look at their portfolio and say, there's a role for active management here, because of course, active is often very value added in times of disruption, dislocation, when the market isn't on a one-way tear.
Absolutely, and what I'm most excited about is we don't have that many rock star managers like you that are in the space. And the biggest thing, the most enlightening aspect of your offering is that you are active and transparent on a daily basis. We can go into your website daily and see any trade you made, and you're fine with that.
Absolutely. I mean, we have a culture of transparency. So I remember there was a clothing retailer in New York City when I was a kid called Cy Sims, and he used to say, an informed consumer is our best customer. We think if we're stewards of our clients' savings, we want them to know what we're doing, what we own. So in that sense, transparency is part of our culture, but we also have low turnover, we have a focus on large companies. So the idea of being transparent is a fairly easy leap for us to make because the companies are large and because we change portfolio positions so infrequently.
Great. So 3 strategies, very similar to some of your mutual fund offerings. Let's run through them quickly.
Well, our core is, of course, our Davis Select U.S. Equity, DUSA, and that is really based on our long experience in domestic large cap portfolios. It's a concentrated portfolio, very different than the indexes, concentrated in 25 or so companies, and that's DUSA. Then we have one that is tied to our long history in financial stocks. I've run a financial mutual fund for 25 years, so we see real opportunities companies in the financial area, and yet the financial ETFs that are out there are extremely concentrated. You think of the XLF having 45% in 5 companies, 4 of them are mega cap banks. So we're going to be offering the Davis Select Financial ETF, DFNL, and that will be based on our long experience on that. And it will be concentrated in the financial sector, but diversified among the best companies in all of the different subsectors in financial services. And then finally, one tied to our global research platform. So this is a worldwide ETF that can invest anywhere, the Davis Select Worldwide ETF, DWLD, and that has a mandate to go in any market, anywhere around the world, companies of any size. It will build a fairly concentrated portfolio. We've had a lot of experience in this space, and boy, will it look different than the indexes.
Absolutely. Well, Chris, again, I'm all excited for you, and congratulations. I look forward to seeing you a lot more.
I hope so, Tom. Thanks so much for having me.
Thank you.